Welcome everyone to the 40 Finance channel. My name's Jeff Beers. Today is the February edition of 5 growth stocks under $25.99. If you enjoy this type of content, please like this video, share it with your friends. It makes a big difference as I'm trying to grow this channel. Let's jump right in. All right, first stock on our list today, coming just beneath the $25.99 line, is Dropbox. Dropbox is one of the leaders in cloud-based document sharing platforms. This is a one-year chart here, and you can see that the price has ebbed and flowed between $25 and $29. However, they're really starting to hit their stride in terms of finding clients, most of them enterprise clients, who are using Dropbox to have secure document access for collaboration with project managers, other departments, things like that. Dropbox right now is not a profitable company yet. They have no PE ratio for the last 12 months. However, they do come on board with profitability in 2019. Forward PE is looking at 56.49. And guys, I can tell you from experience with Dropbox, the main advantage they have over the free options such as Google Drive is the speed and security of what they offer. So if you've ever uploaded to Google Drive a large file, say a video, something like that, it typically takes a while to get it up into the cloud on the free service. But when you pay for Dropbox, you get a much faster turnaround time, much faster collaboration when you're trying to move files from one department to another. So it is a great product, even though you might think that there's a lot of free competition out there. You know, on the corporate side, on the business side, nobody necessarily cares about free. They care about performance, and that's where Dropbox really shines. Looking at analyst ratings for Dropbox right now, you can see they have a 40% upside for most of these analysts over the next 12 months. That's a great return. You got a high of 37 and a low of 35. So because it's a small stock, you only have 4 analysts who follow them regularly. But I feel really good about the prospects for Dropbox growth over the next 12 months. And hey, if you can get into this stock and hold it for 2 or 3 years, then you're looking at a potential 40% upside or more, which will handily beat the market. Next stock on our list is Boingo Wireless. So Boingo Wireless, ticker symbol Wi-Fi, gives you a good idea of what they're all about. They're a Wi-Fi provider for big public spaces. So if you think about airports, if you think about shopping malls, things like that, Boingo offers sort of one-stop shopping for these real estate locations where, quite frankly, the people just don't want to screw around with setting up a network, being responsible for it, all those things. That's where Boingo comes in. They can provide turnkey solutions to putting Wi-Fi into very, very large venues. And Boingo makes some of their fees by charging for Wi-Fi direct to the consumer, depending on what kind of scenario it is. If you've been to some hotels, you know not all Wi-Fi is free. Sometimes they charge you $2 a day or whatever. Boingo offers that opportunity for owners to make money off of Wi-Fi, but then they also offer free versions as well. And it's a little bit of a roller coaster ride with Boingo, depending on how the earnings come in each quarter. You can see over the past 12 months, it's been relatively stagnant overall. However, you've had some big ebbs and flows. And so any sort of stock you're looking at that's at this price level, there's volatility. But over the long term, I think Boingo's got a great spot. It is important to note, as you see with the PE ratios, both forward and last 12 months, they are not profitable yet, but they do have big growth plans for the future. And when we take a look at the analyst projections for Boingo, this is another one that has a 42% upside. Right now, this only has 2 of the best performing analysts who are following this, so it's not a widespread opinion. However, you can see that these guys are noticing the growth potential that I noticed as well, that if Boingo continues to sign big time clients, then they're definitely headed in the right direction. And let's face it, Wi-Fi access isn't going away. It's just, can they sell their enterprise solutions to, say, a concert venue or an arena, just come in and say, hey, Wi-Fi, don't worry about it. You know, we'll charge you XYZ, we get it set up, we handle security, everything like that. I think it's an attractive company and concept for the coming future. Next on the list is EverQuote, coming in at only $5.75. EverQuote is an online insurance marketplace, and for me, I feel like this is a world that is rapidly growing. So the concept of life insurance, home insurance, car insurance, all those things, the days of the long applications, price shopping, calling 1-800 numbers are basically over. And that's what EverQuote is focused on. It's the online signups for the insurance industry, in particular, life insurance, medical insurance. And what they've done is brought a multitude of companies together. They don't provide the insurance, okay? They provide the comparison, and they give you quotes that are directly related to your individual situation and then help you find the best price. You see, last year it was as high as $17, and now you're looking at $5.75. Some of that has to do with just the general market decline as we went into the last quarter of the year. But then some of those questions kept popping up about EverQuote. However, from a long-term perspective, I think EverQuote is an easy win. You take a look at what analysts are saying here, and you have a 200% upside potential in the opinion of 3 top performing analysts. That's over the next 12 months. So if you believe in insurance, which everyone is going to continue to need, and you believe that the insurance industry will be consolidated mostly into online applications, EverQuote is exactly where you want to be. And at an entry level point of $5.75 and prospects like this over the next 12 months, buy and hold a few shares for a couple years, see where it lands out. It's pretty low risk, and you might come out very big in the end. Okay, next on the list is Camping World Holdings, which I say unfortunately is a stock that I bought into the hype around spring of last year. And you can see that last year wasn't so awesome for Camping World Holdings. And if you ever driven by a Camping World store or you've been inside, basically they have taken, it's a superstore for camping, RV equipment, all those things. They have a very aggressive model of buying independent RV dealerships and stamping the Camping World brand on them. They are definitely in an acquisition growth phase. Unfortunately for them, the timing right now coming to the end of the bull market, everyone's questioning, will people buy RVs, right? Will they have the extended income to make these purchases? Can it keep the ship afloat during this acquisition period? I'm not sure about the next 12 months with all the fear of recession and all those things going on. But from a 5-year standpoint, 3 to 5 year standpoint with Camping World, I still like it. I've probably lost $5 to $7 a share on my purchase at Camping World, but I'm going to hang tight with it. I really do believe over the next 3 to 5 years, this could be a strong company, particularly with the way the camping demographic is growing and the outdoor sports are growing from a recreation standpoint. Okay, I like what I see when I look at the market for people who want to do something different than go to Disney World, right? They want to go to Yellowstone Park. They want to get cabins on a lake and go fishing and boating and all those things. That's what I see with Camping World's growth, is capitalizing on that market. And if they can expand more nationwide with their acquisition strategy, they can really have a stranglehold on it. No PE last year, no profits. However, this forward PE of $5.48 is pretty encouraging. It shows that profitability is right around the corner. And this downturn here to $13 makes it a really intriguing play. You guys can save some money where I jumped in too early. Unfortunately, I didn't jump in right now because I still believe in the stock, but I paid a little bit too much for it. Looking at the last 12 months, or excuse me, the forward 12 months from an analyst perspective, you got a couple top-rated analysts who are projecting a 75% upside on Camping World. This is really where I need to get in the next 12 months to turn the corner on my poor timing of buying. But it just shows you that there is belief in the market. Camping World is not without their issues. There is some questions going on about, hey, is this the right time to acquire? Should you guys hold back and wait till the RV vehicles show a little bit of recovery in the market? I say buy when the market's down and hopefully profit when it comes back up. Okay, so the last stock on here is actually an ETF, and it's one that I'm kind of excited about because of what's coming out here. For $25.63 per share right now, you can get into the Global X FinTech ETF. And if you're not familiar with the FinTech revolution, it's the concept that a lot of banking, loans, finance tools are moving online, and the days of the brick and mortar banks are slowly declining. I personally believe that myself. That's why I like this ETF. The top holdings for this ETF are Square, PayPal, Fiserv, Intuit, and First Data Corporation. Those are some really strong companies that have pretty good growth projected for them. So if you don't have a lot of money to invest right now, but you believe in this FinTech market, this Global X FinTech ETF over the next 3 to 5 years, I think is a phenomenal play. And you're coming in at a time when it's actually went down because of the stock market movements. So you see it had a high somewhere in the neighborhood of $30. We're down to 25 today. So getting in soon, even if you're only going to buy 10 or 20 shares, I think it solidifies you in some top name companies in the FinTech world for the long term. And in my opinion, at least from a long-term perspective, it's pretty much a can't lose scenario. So there you go, guys. That's 5 stocks you can buy today under $25.99. Hope you enjoyed this presentation. Please like and share the channel. Subscribe if you can. I really appreciate it. My name's Jeff Beers. This is the 40 Finance channel. We'll see you on the next video.